Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up. That helps us understand if these are the sorts of programs that you would like us to be producing for you. And of course, you can leave your comments below. That helps us with the sorts of questions you think we should be asking, how you think we're doing, and of course, what you thought of gold and minerals. You can also catch this as a podcast, transcription, or article on cruxinvestor.com. And of course, for Crux Investor Club members, you get early access to this interview, training courses, and commentary from macro experts from all around the world. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this one, click the notification bell. We spoke earlier today to Warren Rehn, CEO of Gold and Minerals. They're TSXV gold explorer with assets in Mexico, Argentina, and the US. But we're going to focus on the Mexican assets. They have a kind of entrepreneurial spirit to them, and that they have a lot of moving parts and not a lot of cash, but they have managed to generate cash from leasing of an oxide mill at Velardeña. They have got options on a couple of their projects, which kind of takes that liability off their hands and potential some upside, including one with Barrick down in Argentina. What they're going to do is focus on Rodeo. That's got a 2-year life of mine, very small, but generates enough cash to fund their flagship project, Velardeña, to get into production. So they've had a long run of trying to sort out the metallurgy there. I think they're finally there, talking about an aggressive, a slightly more aggressive approach to taking advantage of this gold bull environment that we're in and see if they can get that thing into production any quicker. Upside, quite meaningful. We talked through some of the numbers, business plans, how they've gone about survival mode and what their plans are for the future. So take a look in the description below at some of the topics we cover. Anything interests you in particular, click the number beside that topic. That's got a timestamp, and I'll jump you through to that part of the interview. Otherwise, sit back and enjoy what Warren has to say. Warren, how are you doing, sir?
Great, man. How are you?
Not too bad, not too bad. Towards the end of the week, I have to say, and we've got a bank holiday weekend here, so I'm kind of looking forward to sitting back and not working, if the truth be known. And what about you? What are you up to?
We're going to take a week off here after the summer, right before the Labor Day holiday. So also looking forward to kicking back for a little bit before we get back into September.
There we go. Two guys ready for a rest. Excellent. Well, look, we had you on the program back in June. So some of our audience heard that story then. But for the people who haven't, can you give us a 1-minute overview of the business, and then we'll pick it up from there?
Yeah, great. So we're a publicly listed company. We're in the gold and silver exploration and mining business. We have been a production company before, and we're getting ready to go back into production with a gold asset in Mexico. Most of our assets are in Mexico, northern Mexico, Durango State. We do also have a major asset in northern Argentina and some exploration property in Nevada. So it's a transition period for the company, moving back into production early next year.
Okay, you've got a lot of moving parts in the company. Okay, I kind of, when I initially approached the conversation last time, wasn't quite sure how it all pieced together, and I think we kind of got there, and we kind of understood what it is that you're trying to build and the order of play. And I think it's kind of worth going through that again. So I'm going to go through the various components, if I may, and just sort of tick them off and sort of move towards, I guess, the end goal, which is what you're moving towards as well. So the US projects in Nevada, Sand Canyon, are you doing anything with that? Has anything changed since we last spoke?
No, nothing new. You know, we had a first round of drilling. It was interesting, not compelling. We're looking at where else we'll focus within that large property position, but nothing immediate. So it's still a property we're maintaining and we're doing some surface work on, but no big spend in the immediate future.
Okay.
And frankly, we've met our commitments until 2021.
Okay, fine. And then we're going to move into Argentina from there. So El Quevar is something that you have got. Well, Barrick have got an option on it. What have they been able to do? Are they encouraged? Are you getting any feedback? What do you know?
Yeah, so they haven't really been able to sink their teeth into it yet based on the COVID restrictions in Argentina. Argentina shut down early and completely, and they really have not yet been able to get back up on the project. So we're delayed a bit on that, and it's been essentially a delay since April. We expect that they'll be able to start work this Southern Hemisphere spring. but we don't have any news to follow up on that yet. But they're still ready to go as soon as they can. So it's still to be coming.
Okay, so remind me exactly what their commitment is to that project.
Yeah, so they're committed to do exploration work totaling at least $1 million over the first 2 years. Now they're going to start with surface work. They're very interested in the high sulfidation epithermal system there. They think they can find a big gold deposit. Now we've found a reasonably sized silver deposit that just wasn't quite big enough to make it work for us. So it was a great opportunity for us to get a big company in here, a company who really knows the ropes in these types of systems, to come in and see if they can be successful. So they've got up to 8 years to complete their process. And in order to vest, they have to come out with a PFS, a pre-feasibility study, on a deposit that has at least 2 million ounces of gold, payable gold, or gold equivalent in it in order to vest. And they need to spend 10 million in minimum spend over that 8-year period. We expect they'll move a lot faster than that, but that's where.
Okay, and you've got no liabilities. There's no expenditure required from your part.
No, they'll cover all the costs. So
Great.
we merely have to maintain a basic structure in Argentina. They'll cover the camp costs, the property costs, and all their costs moving forward until they vest. And we're carried at 30% once they do vest.
Okay, so that's US and Argentina covered. I want to focus on Mexico because that's where you want to focus. But before we get into Mexico, last time we spoke, you were talking about raising some debt. You've ended up doing a bought deal instead. What happened?
We looked hard at the debt possibility moving forward, and the terms were not attractive. So when we got to a point in capital markets where we could do a deal, equity deal without warrants at a reasonable discount, we moved that way instead. Our share price had increased quite a bit since the April deal that we did, a small deal. And so it gave us the opportunity, which was better in our mind for the company and the shareholder to do it on an equity basis than on a debt basis.
So what is
the problem is, these companies that bring debt are asking for way too much collateral for the debt that you're acquiring.
Well, tell me about that. Help us, educate us. So what were they asking for? What were the terms?
Actually, the collateral that they're asking for was basically all of our assets in Mexico, which are potentially worth 100 million US, more or less, just discounted, and that was for a $4 million debt deal. So you look at that and you say, well, what could go wrong here? We didn't have permit in hand. You don't know what's happening out there in the world beyond your control. So it was much more favorable to the company and to the shareholder, in my opinion, to do the bought deal and instead of the debt deal. It's a matter of limiting risk here. So that's what we were doing.
Yeah, as a former debt provider, you want a bit of coverage, but that seems extreme. If you're looking for $4 million and they want $100 million of coverage, I mean, I guess they didn't value your assets the same way you did.
It's a matter from their perspective of having a part of the company that would be able to produce the kind of money that they needed to recover, in a worst case scenario. So the problem being their worst case scenario is pretty drastic, and it doesn't take into account the shareholder or the company. It would have basically left us in an untenable position moving forward if for some reason we'd had to give the collateral up instead of repay the loan. So that level of risk just wasn't acceptable to me and to the board. So we moved the other way.
Yeah, debt guys. We have a way of making things interesting, that's for sure. But so what was the feedback from the shareholders? Because, I guess people are going, oh, dilution again, come on. I mean, have you been able to get any feedback? Yeah,
so the feedback was, not again, more dilution. And, it was perhaps 15 to 20% dilution to the shareholder, but it gave us clear runway moving forward. And we could move forward on more than just Rodeo. We could also move forward on other exploration projects. We could move forward on our plans with Velardeña earlier than we otherwise could. So a bit of pain, but long-term gain. And it completely de-risks our position moving forward in terms of money in the bank. We have plenty of cash to do what we need to do. And now I can say, categorically that we will not have to raise more money before Rodeo is in production.
Okay. So, well, let's get on to the projects in Mexico. So you've got Velardeña, Santa Maria, Rodeo, your Quevar and flagship. I'm not quite sure I'm pronouncing that, but okay. Let's talk about Santa Maria first, because you have, again, I think you've got an option with another junior company looking at that, taking it off your hands. I mean, what's that deal look like, and why have you done it?
Yeah, so Santa Maria was a focus for us since 2014. Early on, we thought we could build a production center in the Parral area of Chihuahua, and that was going to be the basis. It didn't get big enough fast enough, and we spent a fair bit of time and money, moving it forward. It wasn't quite big enough to capture our complete interest and get the board on side to make a production decision. So we tried to find some partners in it, and we finally found a group, Fabled Copper, run by a guy who he's had success in getting in the capital markets and getting things funded. And so it makes great sense for us, as being too small a project for us, to farm it out to a company that it's the right size for. So we're pleased with the deal. They're going to pay us about $4 million in cash over 2 years. $500,000 on signing, and then we have a royalty interest on top of that, which could, over the life of the mine, produce another $2 or $3 million US. So it more than pays us back. It's a great little project for a smaller company, and it removes a distraction from us. It's just the way to go forward.
Okay, and let's talk about Rodeo, okay? Because that was the big part of the conversation, which is kind of the light bulb moment for me when we were talking last time. So again, just remind people what you're trying to do then. I want to kind of get into the detail of it, if you don't mind. So give us an overview first.
Yeah, so Rodeo is it's a gold deposit that's within haulage distance, trucking distance, to our Velardeña oxide mill. That's an oxide mill that we've had leased out to Hecla Mining Company for 5 years. Their lease is ending end of November this year. And then we would obviously like a way to use that mill to make money. The best way forward for us with that asset right now, with an oxide source, is the Rodeo gold deposit. It's a small deposit. It's close by. It's about 90 kilometers from the mill. So haulage cost is low. And it's a high-grade, open pit, low capital project that we can put together rapidly. We're well on our way to getting permits to go ahead with it, and it'll produce about 44,000 ounces of gold over about 2.25 years, at a cash cost of around $800 an ounce. So huge margin, very low capital, about $1.5 million capital cash before we actually make money. So that's like the spend going into the production period. And we can gear up to have it running in January of 2021.
Right. But it's a two-year life of mine. There's not any exploration upside around it. This is purely to produce cash.
That's the main. There is some upside, and we will do some more work around it. But the key here is that you have to have a grade that allows you to truck and mill process. You can't heap leach this stuff. It has to be milled, given the type of ore that we're talking about. But the milling recoveries are good. They're in the 80% range. There is upside. We'll do some more work on it. But this gives us, the PEA was anticipating about 25 million free cash flow net after tax, and that was at $1,600 gold. With the sensitivities and looking at the increased gold price, we're talking north of 30 million net after tax income over a couple of years period. So a great way to cash up the company and move us forward to bigger things, including Velardeña and possibly additional exploration at Rodeo and our other projects.
Okay, so let's say even if we discount it for all of things go wrong. It's a small pit, only needs something small to go wrong, and it can delay things immediately. So let's say plus 20 million free cash flow, but that's going straight back in the ground on your other projects, mainly Velardeña, right? I mean, that's the intention.
Yeah, and we don't need that much. So it gives us float to do what we need to do at Velardeña and do additional work and look at additional opportunities, which is really the way to grow the company. Now, Velardeña is a great asset. It's not a huge mine either. A narrow vein, so you can't produce it very quickly, but it does have high value. And now that we've unlocked that using the biooxidation test work that we've done, we do need a bit of cash to make that go. About 5-6 million is what we think that's going to cost us. And then a couple million just for working cap to get it going. But with the money we're making from Rodeo, we'll have more than enough there to move that forward and continue to move forward with our exploration plays, Yokivo, Sand Canyon, other opportunities, and there are many.
Okay, the way I walked away thinking about this project last time, Rodeo was your ATM to unlock the value in the other assets. Okay, so it in itself doesn't have value other than that it's cheaper funding source. That's the way I was approaching this. So can we talk about Velardena? Because you touched upon it there. There were some metallurgy issues for quite a while, which you have been resolved. You're telling me have been resolved. In the meantime, while you're kind of getting this ATM going, you have leased out the oxide mill for a period. Can you just tell us about that, the structure of that deal?
Yeah, that's the lease out to Hecla Mining Company. So they started that in 2015, and it's been a 5-year run. Now, we've been making about $5 million a year on the lease, free cash coming out after expense. So it's been quite attractive for us. It's helped us limit the amount of other cash we needed to raise, even though we have had to raise more capital to be a going concern. It's been a very successful relationship with Hecla. Now, they're apt to have additional needs going forward to use that mill again sometime, and so I think we'll probably see some future relationship. We haven't nailed that down yet. They're still getting their permits for their oxide deposit together, for their additional oxide deposit. But meanwhile, the Rodeo fits in perfectly in the gap period after Hecla leaves until we have an additional source of oxide material, either from Velardeña, possibly from additional material that Hecla wishes to run, and very significantly from the biooxidation products that we will be able to produce from the sulfide mining at Velardeña. So that has to be cyanide leached, and that would go to that oxide mill as well. It just doesn't fill it up. So we'd like to have additional feed sources down the road. Okay, so again, I'm just trying to piece this. It's an organic jigsaw puzzle of moving pieces here. So I'm trying to fit it all together. Because it seems to me that it's kind of quite entrepreneurial in spirit, in the sense of how you're piecing all of these things together just to kind of keep things going. So let me be clear on the numbers. Velardeña with Hecla, was that, you mentioned the number $5 million. So was that per year, or was that over the 5-year term? No, so that Velardeña needs a capital investment to build the biooxidation plant of $5 to $6 million. No, I meant that's just a capital. Yeah, I got that bit. I was referring to the leasing component. That was $5 million per year that we were getting from Hecla on that. So net, I think they started production in 2016, about half a year pre-production period there. But we've netted 20 million from that lease over since 2015. Okay, and obviously covering G&A and so forth. But where were you spending that money? What was it going on? Yeah, we've moved forward on exploration projects over that period of time, including the Santa Maria, the work we did at Quevar, which was significant. The work at Sand Canyon. So our exploration portfolio in general is what's that has been invested in. Including the work we've done on Rodeo, getting that ready. And frankly, people don't realize it, but it costs a lot of money to run a small public company in the U.S. More in the U.S. than in Canada. So if you're U.S. domiciled, you'll spend more money than you will if you're Canadian domiciled, by far. Right. Okay. So Rodeo going to be producing, throwing off the cash you need to kind of get Velardena going. Have you or the board had to think about, in this kind of positive gold environment, about accelerating any of the processes? Because your share price has popped up again since March, like a lot of gold companies, on the back of economic forecasts. So have you changed your plan with regards to Velardena at all? Yes, we have. In my mind, and this is still tentative, needing board approval and things like that. But the board's well behind this effort. We can accelerate the Velardena restart. So the question is understanding exactly how far we can accelerate, how fast we can accelerate, and to make sure that we could be profitable selling the other two concentrates. We make three concentrates from the sulfide material coming out of Velardena. A lead concentrate, which contains most of the silver values, a zinc con, which is fairly low value, and then the pyrite con, which contains all of the gold values essentially. So we'd have to be able to make money on the lead con, zinc con, and I think we can in this environment. I need to do a bit more work just confirming that we can do that with the change in processing to get all of the gold that we can get into the pyrite, arsenopyrite concentrate because of the better payable. Then it's a question of how long can we stockpile that material until we have the biooxidation facility built. So that's the open question right now. I think we can start and stockpile. And then once we have the biooxidation facility built, then process. So that would potentially allow us to start Velardena sulfide mining in 2021, be accumulating the pyrite, arsenopyrite concentrate with all the gold values, and then process that in the biooxidation plant once we have it built, which will take about 1.5 years from today's date through engineering studies, through design studies, construction plans to actually get that facility up.
Anything that's...
So there's some time things to...
Yeah. Okay. Given how long the metallurgy problem solving took, what confidence do you have that you're going to be able to accelerate the Velardena efforts?
The big time consumer was figuring out which way to go. And so you look at every possibility. We looked at all the different options from autoclave to some sorts of fine grinding, oxidation, roasters. Having selected and knowing with two independent separate tests over a period of years showing essentially the same result, I have a lot of confidence that we know what we're doing now and the way to move forward. Now it's a matter of just getting the details of how much what's the sulfur content. How much material are we going to produce, what the tank sizes have to be to make this work before you start to build. You just don't want to build the wrong size facility. You have to build the one that works for you best. Otherwise, you overspend. So I'm quite confident that we know how to go about it. Now it's just a matter of getting these steps organized and in place. And we have a contract with a local engineering company here who's it's headed up by probably the best bio-oxidation expert in the country. And I'm very pleased with that work that's been going on there, and then the support we've had from Uditech, who has championed the process. I'm very confident that we know what we're doing and that we can accelerate.
Okay, so remind me some of the numbers. I'm just trying to understand the economics around Velardena. So give me those numbers again.
Yes. So the PEA that we put out earlier this year, using 3-year trailing prices, which are quite low. This is a $1,300 gold price and a $16 silver price. That study showed a net present value of around 80 million for a 10-year project at Velardena. Now, when you factor that up with the sensitivities on the new pricing, that's over $100 million, well over $100 million, and almost double what the PEA was suggesting at current prices. So it's a very dramatic prize for us to go after for a company with a market cap of 65 million. So you see what we're looking at here. So we get the Rodeo into production. It gives us the cash we need to go forward on Velardena. We move Velardena forward as rapidly as we can, but being conscious and careful at every step, not to overspend and not to waste money.
And no more dilution. You told me that already. Okay. So what's the next step with regards to scoping studies? What's happening next after PEA? Again, timing. In terms of accelerated timing. How do you drive this?
Yeah, we've engaged the engineering company to do the studies. They've done a gap study to see what we need to do to actually make it to the next step. Our next step will be getting new material out to do flotation separation studies to further characterize the exact characteristics of that iron pyrite or arsenopyrite concentrate. So we know what size plant and to build and what we'll need to neutralize the acids and keep the oxygen or the air moving through it. So that gives us the construction plans and the blueprint basically of what we need to build, and then we can move forward. If you don't have the blueprint, you can't build it, right? So it's that series of steps. I think from today's date to completion, a realistic time schedule is about 1.5 years to having that bioxidation facility built. And so then the question is, how soon before that do we start the sulfide production and stockpile so we can process more of this material faster, basically, while still taking advantage of the sulfide production from Velardena in the current price environment.
Okay.
But to me, it works.
Okay, understood. So a few things that you're going to need to come back to us on, obviously. I think, and we're all focused around Mexico because Rodeo, you've got to get that into production in the new year. Santa Maria, you've got to get that deal over the line. Velardeña, there's a lot of work to come, but it's going to be self-financed. So that's all good news. Where's the blue sky coming from? Because this is all a little bit small. Where's the blue sky upside coming from? And can you fund it?
Yeah, so there's a couple of obvious things with the current projects. One is exploration potential at Rodeo. We'll carry that forward. As we're producing, we'll do the exploration. We'll see exactly how much that can be increased in size. That would be the low-hanging fruit. So we'll do that for sure. The Velardena resource is open at depth. It's a small property, but these veins go deep, and we have evidence that there's another more than 500 meters of vertical extent to the system based on drilling in hand. So we know we can make that bigger and it'll last longer. That increases value. And then we have our portfolio of exploration projects, one of which we'll be able to drill this fall, the Yoquivo district. It's an epithermal vein district in Chihuahua, just on the east side of the Sierra Madre. Great location, veins that are known. They've produced in the past, in a historical fashion. And we're ready to go. We know we have ore grade material on surface. We have the drill permit in hand. We'll have results on that here by the end of the year. And we'll know if that's going to be, a potential big focus for the company after Velardeña or to bring on next in the pipeline. We'll also continue in Nevada with the Sand Canyon project. Great location, great project. Interesting results, but nothing compelling. But we know there's more to be done there as well. We also have an exploration portfolio in Argentina. As soon as we can move forward in Argentina, this is outside of Quevar, that also looks quite attractive. And frankly, one of the better properties I've seen in my career down there that we're trying to move forward. So there is exploration upside in the company, and significant. And that's going to be basically able to be explored, self-financed from the cash flow from Rodeo and Velardena. So that's the model, and that's the blue sky. In addition to that, Barrick's success would change this company, overnight into a very different beast. If they find their 5 million ounce gold deposit that they're looking for, our 30% will be worth well more than any of these projects put together. So there's great blue sky there.
Okay, well, you've progressed and done quite a bit since we last spoke. You've still got a heck of a lot to do, even for the rest of this year. But it seems like a plan which is reliant on successive things happening in the right order for you. But if they do, at least no dilution. You can finance this kind of aggressive growth. And I guess what I want to see from you is some accelerated delivery plan to take advantage of the current environment.
Yeah, and that's exactly what we're putting together. So we will do that. There is no question in my mind we'll be able to accelerate. And as we continue to get news flow from Rodeo, get the permits in hand, which I expect this fall, we get that put together. Yeah, and we go from there. We have our contractor in place. We start preparing to mine, and we'll be ready to get that ore moving to the mill early in the year, next year, January, and then be pouring gold in late January, which would be a great step forward for the company.
Beautiful. Warren, thanks very much for the update. Lovely to speak to you again. It's great hearing what you're up to. Give us a call when things start happening, and especially looking forward to seeing if Rodeo can hit those deadlines. Appreciate it. Thanks again.
Thank you, Matt. Great talking to you.